That brings us to our last but not least presenter of the day, Energy Fuels. It'll be Curtis Moore. I want to read a quote from Brien, where he says, with 2 uranium production centers at the White Mesa Mill in Utah and the Nichols Ranch facility in Wyoming, Energy Fuels is both a production and a development story. Given the bright prospects for the uranium market, this company is very much a buy. Board and management of the company is currently buying and has currently bought over 1 million shares in the market, which represents about 2% of the company. And that's what I like to see in a lot of the companies here today. Their management teams are actively buying the stock. So I'd like to bring up Curtis to talk a little bit more.
Well, thank you very much, Scott, and thank you all very much for sticking around to the last presentation of the day. I guess since I'm the last one, that means I can go on for an hour or two? Is that? No. All right, I will keep this within the time limit. So again, you've heard a lot about uranium today, and there's really a good reason for that. There's a lot to be excited about in this industry. We see prices are up over the last 18 months or so. The market fundamentals are very strong. Japan has restarted their nuclear reactors. China has an aggressive nuclear program. And you've also heard a lot of other good uranium stories here today. Energy Fuels, I would contend, is one more. And really what I'll describe as a company like Energy Fuels, we have wonderful leverage to these increasing uranium prices that we anticipate seeing over the next couple of years. Again, we have forward-looking statements as well, so you may review at your convenience. So there very much is a real uranium opportunity out there. Uranium, I term it the real clean energy. It has no carbon emissions, it has no air emissions, and it's seeing extraordinary growth right now. Countries like China, countries like India, even the United States has some very aggressive nuclear programs. The United States right now is the world's largest producer of nuclear energy, and we are the world's largest consumer of uranium. There are 2 different ways you can mine uranium around the world. There's conventional production and there's in situ recovery. Energy Fuels, we have both types. And it's interesting, we are one of the few producers that are actually presenting here today. Even in today's fairly depressed uranium market, we are producing economically from our deposits. Energy Fuels has emerged as the dominant conventional and ISR producer in the United States. We focus on the United States because it is the world's largest nuclear market. This slide right here basically describes the investment thesis behind Energy Fuels. Again, we are a producer. We expect to produce about 900,000 pounds in 2016. We have both conventional and ISR production. We're one of only 3 companies in the world that actually have both types of production, the other 2 being Cameco and Areva. We have premium sales contracts. We do have excellent leverage to these rising prices, but we are selling uranium right now into some contracts at about $58 per pound. So that's a wonderful source of revenue for our company. But that 4th bullet point, I would say, is what really differentiates Energy Fuels from many of our peers. We have very strong, very significant production growth potential. As prices rise and as these uranium markets recover, we have the ability to significantly scale up production. We are a proven producer. We have relationships with the utilities, but so I think that we've demonstrated our ability to put uranium in the can. And through several projects that I'll describe today, we have the ability to increase that production by many multiples where we are right now. We do have a strong balance sheet. We reported about $43 million of working capital at September 30th this year, of 2015. That included $18 million of cash, and the remaining amount was in inventory. And again, you've been hearing all about these compelling uranium market fundamentals. I'm not going to talk too much about that today. You've probably heard a lot about that. We believe it. We believe that this market is on the verge of turning around. Energy Fuels is a potentially valuable call option on those rising prices. We do believe that we are strategically positioned in the United States. This map here shows all the nuclear power plants that are operating in the United States. In the triangles, many people don't realize, but if you can see those circles down in the lower right-hand corner, we actually have 5 nuclear reactors that are under construction. One of those is likely to be starting up here in 2016, the one in Tennessee. We operate in the Rocky Mountain region of the United States. We have 2 main production centers. We have the White Mesa Mill, which is in southeast Utah, central to the best uranium deposits in the United States. It's the only conventional uranium mill in the United States. If anybody has conventional uranium that they need to have processed, they have to come through us. We also have the Nichols Ranch facility up in northeast Utah. That is an ISR facility that's in situ recovery. Basically, it's a form of in-place solution mining. It's low cost. This is a wonderful project. We acquired it just last year through another company that we acquired called Uronium. So I think what you can think about, one way to think about energy fuels is that we have proven capabilities to produce right now in a low-cost environment, mainly through our ISR production, but through our conventional assets, we have the ability to significantly scale up that production. ISR typically equates to low cost. Conventional typically equates to scalability. This slide just sort of describes our scalability. I'm not going to go through it too much. Again, we have a conventional mill in production. We have an ISR plant in production. We have mines that are in production. We have a wonderful and robust project pipeline. Permitted mines on standby. These are mines that are fully permitted. They're fully developed. We have ore right in front of us, and we're just waiting for some higher prices and a little bit more demand to put those into production. And we do have an industry-leading uranium resource portfolio. We have the largest NI 43-101 resource base in the United States among producers. We even have some uranium reserves in our portfolio. I think we're the only company that has reserves. This slide is a little bit busy, but it does show what we represent to be some pretty good value in the uranium space. I would contend that all these companies are undervalued, but I think that we're particularly undervalued when you look at our sales, our working capital, our production profile, and our resources. Quickly hit a little bit on some of the uranium market fundamentals. There's a lot of catalysts that we've been looking for to that we think are going to turn this market around. The uranium price hit about $28 per pound in 2014. That was a multi-year low, and it was a fairly difficult time in the industry. Prices have since then recovered to about $35 a pound. It's not a great price, but it's better than it was in 2014. And I think uranium is one of the few commodities that you can point to that's seen a little bit of positive growth over the last 18 months. Again, Japanese reactors are restarting. 2 started in 2015. 2 more are right behind those. I think we'll see probably 5 to 7 reactors operating in 2016. So that's on a upward trajectory. We have 1 new reactor starting up in the United States, the one in Tennessee. There is geopolitical risk surrounding uranium. Production is highly concentrated in a few mines. I believe the number was almost 40% of all the uranium used in U.S. Nuclear reactors in 2014 came from Kazakhstan, Uzbekistan, and Russia. This is where most of the world's uranium comes from. So if you ever saw sanctions or you ever saw an increase in tensions between the United States and Russia or that part of the world, you could really see the supply of uranium be put at risk. India has a big nuclear program that they're pursuing. And there are large uncovered utility requirements that we're observing right now. And I think one of the earlier speakers talked about a return to contracting from a lot of these utilities. We haven't seen it in a large scale quite yet, but we do think that 2016 could be a real turning point in this market, as a lot of these older contracts start to roll off, and these utilities need to re-up them. And there is certain mine production that's decreasing. $35 is better than it was a year and a half ago, but it's still a fairly unhealthy price, and it's not incentivizing the production that we know is needed to fuel our existing reactors and the ones that are either coming out of the ground right now or are in various stages of planning. China is the 800-pound gorilla in the room here. They have 30 reactors installed. They have 24 reactors under construction. Again, these are not reactors that are on the drawing board. These are coming out of the ground right now. They plan to have, I believe, under their current plan, 6 to 8 reactors being constructed per year. And as was mentioned earlier as well, look out for their new 5-year plan, which is going to be released again this March. And we think that is going to actually be increased to 8 to 10 new reactors every year. This is an enormous amount of uranium demand. And if they have any idea or any concept of trying to meet their new emissions targets, they need to have about 200 gigawatts installed by 2030. The growth in China is absolutely staggering. I'll quickly go through our uranium assets. White Mesa Mill, it's the only conventional mill operating today. We only produced about 300,000 pounds out of White Mesa last year, but you can see it has a licensed capacity of 8 million pounds. We have major scalability at this project, or at this facility. This slide talks about some of our mines. We do have some ore that we're in the midst of producing from a mine that we just depleted in northern Arizona. A lot of people don't realize, but some of the highest grade uranium deposits in the world outside the Athabasca Basin are in northern Arizona. And these are fairly small mines, but they're very high grade and they require very low capital costs to put into production. We're developing the Canyon mine, again in northern Arizona. That has grades that are actually in excess of 1%. This is very high grade material. Those three projects below there, Sheep Mountain, Roca Honda, Henry Mountains, each one of those have between 20 and 30 million pounds of uranium resources and annual production capacity of 1 million to almost 3 million pounds of production per year. So combined, we're talking about 5 million pounds of production per year out of those. This is our ISR facility. We did about, attributable to our company, actually overall, it was about 300,000 pounds out of that facility last year. But again, it has a licensed capacity of 2 million pounds per year. It's in the Powder River Basin, which is where most of the uranium comes from in the United States. And as this slide shows, I guess that was my other presentation, we have a large land position in the Powder River Basin with a lot of exploration potential there. So again, Energy Fuels is a scalability story. We have leverage to increasing prices. We have a proven ability to put production into the can and to sell it to utilities. There are compelling uranium market fundamentals that we are observing right now. And as Scott mentioned, there has been significant board and management purchasing just over the last couple of months. We believe in the company, and we're really excited about the prospects. So I appreciate your attention and enjoy the rest of your afternoon.